We're in a very critical point in the market and there's a lot of opportunity. Specifically, there are some key things to watch, such as Q2 earnings coming out in mid-July. July 15th, we're going to start getting some of the big banks reporting earnings. And we're going to kick off a whole quarter of tech earnings and other stocks that will report and move the market. We also have a lot of information coming from the Middle East right now, and the war tension is creating an opportunity in the market. If there's any escalation between the Iran and Israel war or US involvement, this will create a lot of sudden volatility in the market. So what I want to talk about today is actually a little bit different from my typical retirement strategy. It's going to be purchasing options to hedge your portfolio and to make money off of a big move. Now, this is a strategy that I will tell you upfront right now. It should be used with a small amount of your money. However, you can make a lot of money using this strategy, $5,000 or more per week, even with a small position, if the market has a significant move. Right now, I think we're in a very conducive market to that, given the war situation, given that earnings are coming up soon, given that we have just seen a PCE number that was a little bit different from what I expected. Also, there's going to be next week PMIs starting on July 1st, and we're going to see early Q3 economic outlook. So right now is a very crucial time, and you can take advantage of this volatility because surprisingly, if you look at the market, we have a whole lot of futures right now. We have stocks really hitting all-time highs. And this is the opportunity, I'm telling you. No one's gonna really discuss more tactical trades like this, but when you see stocks at an all-time high, only two things can really happen. They will jump a lot higher very fast, or if there's some bad news and volatility in the market, we will get a dip in a correction. And that could be 5 or 10% very fast. You guys already know this. You have seen this year with the tariff situation, a fast pullback can happen, boom, just like that, okay? So what I'm going to be teaching you today is going to be basically a straddle or a strangle strategy. This is going to be a pretty easy strategy that you can implement, again, with a small amount of your money. By the way, if you're interested in more tactical trading, more volatility trading, more risk management, more understanding deeper concepts than I talk about on YouTube, I am having a boot camp starting next Saturday with 10 open spots. It's going to be a hands-on coaching with me and 10 other members over a 6-week period. And this is going to be my beginner to intermediate boot camp, which will discuss risk management, profit taking, options, specifically generating income, tactical opportunities, and a whole lot more where I will look into your portfolio and help you trade. So you can check that out in the first link in the description and schedule a call. Despite this being the morning, I am freaking excited. I just want to smile a little bit because in all seriousness, I'm very excited for it. All right, so let's take a look at an opportunity on Nvidia. Nvidia right now, I will go over several different stocks, but first of all, Nvidia, I have sold some put options at 140 because I would like to purchase Nvidia at 140. But this strategy that I'm going to discuss right now is going to be a more straddle option buying strategy, which again uses a small amount of your money. So here's how it looks like, okay? Going into earnings, by the way, let's go back here to Nvidia. Let me just show you what the earnings has been looking like. You can see here I have a 140 sell put position that I opened up recently. Price to earnings ratio is pretty decent at right under 50. Market cap is fairly high, but I do think Nvidia will go higher. That's pretty much without question. So look, August 27th, there's still a lot of time here for Nvidia. So Nvidia may not be the best option for this strategy, but anyways, Nvidia will have lots of volatility. So you can use this strategy before or after earnings. You can actually see here how Nvidia beat earnings by a lot in Q1. Q2, we have very high expectations, which we may actually, for the first time, I'm going to predict that we may not beat earnings. But funny enough, I still think Nvidia will go up even if they don't beat earnings. And you see that happening all the time. You see stocks beating earnings, but not matching investors' expectation. This time, I think they may not match expectations, but they will probably come out with something more interesting and innovative, which Nvidia has been doing over and over again. So let's take a look at a straddle / strangle, or this strategy is really just, I will call it a hedge on volatility, okay? And essentially you're buying volatility. So if we go to August 15, this does not capture earnings. What you can do here is you can buy a call option at 155, which is essentially where Nvidia is trading at right now, but you can also purchase a put option, right? So if you purchase a call option and a put option, you're gonna see the chart right now. is going to essentially say, hey, I'm going to be making money if Nvidia rises a lot or falls a lot. Now the trick is you don't even have to hold this position till expiration. You can sell it at any time. What I like about this is that implied volatility is actually low right now. It's actually low. If you look at some other stocks, if you look at historically, right, I've been doing a lot of research on Nvidia, a lot. I've been doing a lot of videos, of course, as well. But in my private research and looking at implied historical trends on volatility, Nvidia has been a lot higher. Right now, the volatility is lower. And given that it's lower, I actually expect an increase in volatility. If you can see right here, if I also go to VIX, I'll show you what the VIX looks like. The VIX is just the fear gauge on Wall Street. And right now, the VIX is incredibly low. It's down a lot over the last 6 months. We're again hitting like a low. And if you look at the escalations in Iran and Israel, and if you look at India, Pakistan, Russia, Ukraine, I mean, the whole world is just in war. War is very profitable, but I do expect more volatility. We are just kind of too low in volatility. And when things feel too good, that is essentially where I want to caution and say, hey, let's prepare for some more volatility, right? It's not that we're going to be in a bear market. I don't believe so. I think we're going to have a very strong second half of 2025, and I'm very excited for it. But look, I think that volatility is a bit cheap at the moment. Now check out this trade in more detail. I'll tell you how to manage this trade and essentially make some really good money off of this trade. So, and I'll show you a couple different trades, not just Nvidia. Okay, Nvidia, if it ends up rising, you see here the break even is 171. So you would need Nvidia to go up a lot to really break even on this trade. That's because the trade isn't really cheap. You're spending $1,600 for this trade, and you're buying 2 options, and that's why it is fairly expensive to break even on this trade. However, you shouldn't really hold this trade to expiration. What I think will happen is more so like a short-term opportunity this week, right? So if you were to open up, let's say, I personally, for my portfolio, I could easily open up 10 plus contracts, but even if you have a smaller portfolio, you can make thousands of dollars, because what can happen here, you can see that the profit is unlimited. But what's more likely to happen is if Nvidia, let's say it shoots up $10 real quick, then this position right here will end up making some really good short-term money, right? So if it just like shoots up here, then you can see here how that's negative 1,600, and then all of a sudden it's negative 600, even if Nvidia shoots up $10, right? So you can see the expected profit and loss. Now this is of course at expiration, but I'm saying in the next 1 week, okay, this is kind of an urgent video, because if the market increases volatility in the next 7 days, you just close out this position, and you would go from here, right, which is negative $1,600, or your investment of $1,600 to like 600, right? Basically, that's implying $1,000 move, right? So if you have 5 of these contracts, then that's $5,000 that you can make in 1 week. So you can make $5,000 in 1 week, and you're only investing, 5 times the 1,600, which is like, $8,000. So on $8,000, you can make $5,000. It's a very lucrative play without even having to hold until expiration. Also, keep in mind, this also works on the downside. So if Nvidia goes down back to 145, basically same thing here. You're going from this negative zone to this more positive zone. So you can make $1,000 swing pretty quickly. And I think obviously this is more on the more speculative side of option trading. I wouldn't call this gambling, because I have a good reason for it. Implied volatility is historically low, and we have a lot of turmoil in the market. We have a lot of opportunity and turmoil with low VIX score, right? So at any day now, we will see volatility. It's a guarantee. It's just really what day will volatility go up? Which day will the market have a reaction to some shock, right? Some shock, whether it's some news about war, whether it's some earnings events, or a variety of other things, right? Or just an update on AI, or simply even a stock like Tesla coming out with some news will move all the other stocks. I mean, they are very, very correlated, especially Mag 7. They all do kind of have some dependency on each other in some ways, especially when it comes to Nvidia. Okay, so this is a trade where you can make $5,000. Robinhood calls this, this is a long straddle position, but the name doesn't matter. What's important is how do you make money? How do you hedge your portfolio? And how do you take advantage of a market having subdued volatility? So again, 1 to 3% of your money could be good here. Of course, if you have a bigger portfolio, it's better. If you have a smaller portfolio, this strategy you can still do in small quantities. For example, we don't have to use Nvidia. We can simply use a different stock. By the way, the portfolio is doing pretty good. We're heading to 4 million, and yeah, with time it'll be at 5 and 6 and etc. But yeah, you can use this strategy on something else like Palantir. Let's check out Palantir right now. Palantir is very expensive short term. Like, we are at an all-time high. So again, congratulations to anyone that has had Palantir. But yeah, it's probably going to have a decent sized move in the short term. So if I go to even a 14-day expiry here, these options are not necessarily cheap, but again, you can get a very fast gain here. So if I buy a call and then again just go buy put and you go for the same strike price, here it's $1,000. It's a little bit cheaper than Nvidia. Let's look at the implied volatility here. See, the implied volatility is 45. So you're telling me Nvidia, has almost 10% less volatility than Palantir on the implied volatility. That's why I'm telling you about Nvidia more so. But Palantir can also be a good trade. Of course, you can also make $5,000 on Palantir in a pretty short amount of time. But Nvidia, I would say, is more surefire play. But here, Palantir, yeah, if the break even on this trade, for example, would be 155, and on the bottom it would be 135. You probably don't want to hold this position till expiry. So this is an option strategy where you would not want to hold until expiry, because essentially it does have to make a big move, and it's much easier for it to make a shorter half move. It's easier for a stock to move up or down $5 in a short amount of time, and then this position will experience a profit of, say you're right here, you experience a profit of $300-400. That's 30-40%. Keep that in mind. You can make 30-40% in a few days and basically cut out this position. Now, this is not something I do often. This is something that I do situationally, where I see opportunity to make a trade like this based off of the volatility curve. If you enjoy some new content and ideas, I'm going to have a lot more content and ideas in my bootcamp over the 6-week period, where I'm going to teach strategies to really profit in the second half of 2025, especially with Q2 earnings, and just a lot of opportunity. I'm very excited for it. So again, it's the first link in the description. Hope that you enjoyed this video. Make sure to subscribe, and I'll catch you tomorrow.